Right, talking about HDFC as well as ICICI for that matter, who are set to produce their results for Q1 FY27. And it's not just the earnings, but also the management commentary going ahead for the NIMs compression, as well as the loan growth guidance for FY27. That will be the key monitorables. Starting with HDFC Bank first, the profits are expected to be around 9% growing on a yearly basis. But the base, it needs to be kept in mind because Q1 FY26, that particular quarter had the one-time HDB financial IPO proceeds included in those numbers of around 9,128 odd crore rupees, which boosted the other income for the bank's results. And also, the bank created around 700 crore rupees of contingent and floating provisions out of those proceeds. So as a result, this quarter's lower other income as well as the provisions are largely base effect driven. That is one to be kept in mind. On the margins front, the NIMs are expected to be remaining broadly stable at around 3.3% with a slight sequential moderation expected due to the policy rate transmission as well as the seasoned agri rate related interest reversals also. The key monitorables will be the management's commentary on the NIMs trajectory, also the CASA recovery, because we saw some bit of moderation in their Q1 business updates, what they have produced. For ICICI Bank, the business momentum, it is expected to remain healthy with the loan growth expected to be around 18.5% on a yearly basis and 4.1% if you see on a sequential basis. Deposit growth, it is expected to be seen around 15.2%, and however the NIMs are likely to moderate for this quarter at around 4.2% as the lower policy rates, they flow into the loan yields. Also the NII, it is expected to grow nearly 10% on a yearly basis while the provisions normalize after the exceptionally low Q4 numbers. So this time the profit growth will be relatively modest because of the provisions normalization as well. The key focus for ICICI will be the margin outlook, the deposit repricing benefits, funding costs, as well as the guidance for growth without compressing the profitability going ahead. Back to you.
All right. Thank you, Mitali, for that overview about ICICI and HDFC.